Hello, and thanks for watching Proactive. I'm joined by Jeff Szyperski, the CEO of Chesapeake Financial Shares. That's the parent company of Chesapeake Bank and also Chesapeake Wealth Management. Jeff, very good to have you with us today.
Thank you, Stephen. Nice to be here.
So, Jeff, you're just out with third quarter results, and it was a strong 3 months for Chesapeake with earnings up 58%. What drove that growth?
We first off, we had a strong quarter, but we also had a 2.2 million gain on sale of a partial interest in a brokerage firm that we've been in since the mid 90s. We still have a relationship, but the brokerage firm sold upstream to an even larger firm.
So tell us then, how are you seeing the environment at the moment? You said it was a decent quarter for the bank.
Yeah, it's really interesting times right now, Stephen, as you can imagine. Fed has raised rates precipitously this year. So from an interest rate environment, we're just trying to normalize with what's going on both the loans and the deposit side. We've been able to stretch out our margin. Our margin was 3.786, which is up from where it had been previously, primarily because we have a lot of liquidity and we have not raised our deposit rates quite as fast as our loan rates, but still the market's pretty tough. There's going to be increased competitive pressure on the margin going forward. It's what we anticipate.
You've managed to grow assets to $1.3 billion at the end of the quarter. Non-performing assets, though, 0.43%. So a nice improvement there.
Yeah, our non-performing assets, Stephen, that's a really low number. And I think we're lower than most of our peers, but in general, the industry has very low non-performing numbers. So if we happen to be going to a recession in 2023, we feel like we've done about all we can on the balance sheet side of that to prepare ourselves for it. So portfolio is really clean right now, knock on wood, and nothing has raised its head as of yet going forward. So we're cautiously optimistic about that.
How would you describe your asset quality going into the fourth quarter?
Our asset quality is as good as it's ever been in the last 15 years. So that from the metrics that drive that, it's extremely strong. So we feel good about that. Really good.
And of course, you've declared a quarterly dividend of 15 cents a share. So you've continued your 29-year history of consecutive dividend increases. So keeping shareholders happy as well.
We're trying to do that. Our shareholders are our lifeblood. So we never take that for granted. We pay a lot of attention to return on equity as a proxy for how we're doing for our shareholders. And obviously, shareholders are always concerned with our dividend. Our dividend yield is right about 2.63% as of last week when I checked. So it's a strong dividend yield, but we'd ideally like to have the dividend yield go down, meaning that our price has gone up. So that's what we hope for.
Jeff, you mentioned those interest rate increases from the Federal Reserve, and we had another one yesterday, 75 basis points. What's your outlook for the fourth quarter and going into 2023?
We had about a $19 million growth in loans in the third quarter, which we were really edified with considering the sharp increase in rates. I do think there'll be more Fed increases. All the prognosticators predict that into at least the first several months of 2023 till they feel like inflation is under control. It'll be really interesting to see what it does with loan demand. I would have anticipated loan demand in our pipeline to have slackened somewhat, and it's not as strong as it was a year ago, but it's still relatively strong. So there are still people borrowing even at these higher rates.
Well, Jeff, I hope you'll keep us updated on any progress. Look forward to speaking to you again in 3 months' time.
Thank you so much, Stephen. It's been my pleasure.
Jeff Szyperski is the CEO of Chesapeake Financial Shares.